Cathie Wood's ARK funds encountered a setback on August 9th as more Palantir stock was added to their portfolio. The ARK funds now hold a total of 5.5 million shares of Palantir, while Palantir's outstanding shares are around 2 billion. Examining Palantir stock closely, it decreased in response to reporting a net income of $28 million, equivalent to 1 cent per share, on revenue of $533 million for the June quarter. This revenue marked a 13% increase from the previous year. Notably, the stock had recently surged in value, climbing from $4.30 to nearly $20 per share since May. Much of this rise was fueled by the excitement surrounding generative artificial intelligence, AI, and Palantir's introduction of an AI-focused platform for the U.S. military. Despite the hype, the company projects only a modest 20% revenue growth. Interestingly, a single optimistic call from Wedbush's managing director, Dan Ives, boosted the stock by 15% in just a few days. While some perceive Palantir as on a trajectory to success, investors are paying 16 times the revenue to hold onto it. Palantir has expanded into the civilian and corporate sectors with its cloud-based software. According to the company, its new artificial intelligence platform, AIP, has garnered significant customer interest. However, the management has refrained from revising their earnings and revenue guidance. For those optimistic about Palantir, the increase in customer count is a game changer, rising by 38% during the quarter. If this translates into accelerated revenue growth, the stock might recover. It's worth noting, however, that growth reached nearly 50% in 2021 and has been declining since then. Therefore, the future direction of Palantir stock depends not solely on hype but on concrete profitability. While the hype is strong, the company must strengthen its profit margins. Investors often monitor a company's stock movement, which insider trading activities can influence. In the case of Palantir Technologies Incorporated, recent insider transactions have attracted attention. Notably, Sankar Sham sold shares valued at $39,353,935 on August 1st, selling 1,967,500 shares at $20 per share. Another insider, Moore Alexander D., sold 21,900 shares for over $434,531. Before these transactions, Planashek Heather A. sold 20,000 shares at a trade value of $400,000. The stock reached a 52-week high of $20.24 on August 1, 2023, and a low of $5.84 on January 24, 2023. The 50-day simple moving average, SMA, is $16.16, while the 200-day SMA is $10.07. The trading volume dropped from 133.81 million shares to 124.98 million shares from the previous day. Analyzing support and resistance levels for Palantir Technologies Incorporated on the 24-hour chart, support is found at 14.59. If breached, a drop to 13.94 could follow. On the upper end, resistance exists at 16.41, followed by 17.58. The Relative Strength Index, or RSI, on the 14-day chart is at 40.00, indicating a neutral technical sentiment. The Moving Average Convergence Divergence, MACD, is at -0.79, suggesting a potential price decrease in the upcoming days. The percent R is at 97.08%, signaling a bearish price movement. Stochastic's percent K advises holding the stock. Is Palantir facing short interest? Indeed, Palantir Technologies Incorporated has experienced short interest. On July 13, 2023, short interest decreased by -13.78 million shares to 124.36 million. Comparatively, on June 14, 2023, short interest was 138.14 million shares. This -11.08% decrease in short interest suggests positive sentiment. Despite short shares representing only 1.98% of the float, the days to cover ratio, short ratio, also decreased to 1.98. According to filings from the Vanguard Group, Inc., they own 160,411,054 Palantir Technologies Incorporated shares, around 7.97% of total Palantir shares. BlackRock Fund Advisors increased their stake, now worth $1,169,533,764. Renaissance Technologies LLC reduced its interest by -5.55%, valued at $622.61 million. SSGA Funds Management, Inc. acquired a 1,047,522 stake. Geode Capital Management LLC bought 747,652 shares. Analyzing analysts' predictions for Palantir Technologies Incorporated's share price, FactSet Research suggests an average price target of $13.65 in the next 12 months, a minus 17.84% decrease from the previous $17.04 closing price. Analysts project that Palantir Technologies Incorporated stock could reach $25 by 2023, with the lowest target at $5. By the end of 2023, 18 analysts rated Palantir Technologies Incorporated stock as a hold. Palantir's stock recently stumbled in value as analysts assessed the Q2 results. The financial landscape is divided in Palantir's direction. While some are skeptical about revenue growth and future projections, others remain bullish, citing the artificial intelligence platform, AIP, and projected profitability as positive factors. Before we continue, we'd like to thank you for watching this far. The recent pullback in Palantir's stock price after the release of its second quarter report has sparked the question, is Palantir Technologies stock a buy now? In response to the report, the stock declined by 5% on August 8th. The report revealed that Palantir's revenue had increased by 13% year-over-year to $533 million. The company achieved an adjusted net profit of $120 million, a significant improvement from the adjusted net loss of $21 million in the previous year, resulting in an adjusted profit of 5 cents per share. These figures met Wall Street's expectations. On a generally accepted accounting principles, GAAP, basis, Palantir reported a net profit of $28 million, compared to a net loss of $179 million in the same period the previous year. This marked its third consecutive quarter of GAAP profitability. While these headline numbers were solid, Palantir's stock had already rallied by 180% year-to-date before the report, which might have set high expectations for an even larger earnings beat. During the latest quarter, 57% of Palantir's revenue was generated from government clients, with the remaining 43% from commercial clients. While the government business grew consistently by securing new contracts and expanding existing ones, the commercial segment's slowdown offset some of this progress. The company expects this pressure to persist throughout the year, projecting a 16% to 17% YOY growth in revenue for the third quarter and at least 16% growth for the entire year, amounting to $2.21 billion. Palantir anticipates that its short-term growth will be driven by the strength of its U.S. commercial business, which outpaced overseas growth, and the gradual recovery of its U.S. government business. In the long term, the company foresees growth stemming from the expansion of the AI market. This will be supported by its new Palantir AI platform, introduced in June. It will empower enterprise customers to build new AI apps and analyze more data through large language models. Additionally, the company believes that government agencies will be compelled to upgrade their AI capabilities to counter new AI-powered cyber weapons. Palantir is focusing on elements within its control to drive its future trajectory. While its near-term growth might not meet expectations of swift re-acceleration to over 30%, the company emphasizes several factors: expanding margins, increasing free cash flow or FCF, stabilizing stock-based compensation or SBC expenses, and boosting GAAP profits. By tightening its spending, Palantir enhanced its adjusted operating margin by 2 percentage points year-over-year, reaching 25% in the second quarter. The adjusted FCF margin also showed a significant improvement, nearly tripling from 10% in the first half of 2022 to 27% in the first half of 2023. This improvement in FCF prompted the company to authorize a new $1 billion buyback plan. Although SBC expenses still consumed 21% of its revenue in Q2, this marked a notable reduction from the previous year's 31% of revenue. During the conference call, CFO Dave Glazer reiterated the company's expectation of achieving GAAP profitability in each quarter of the year. This achievement would make Palantir eligible for inclusion in the S&P 500 following our Q3 results. With Alex Karp as the CEO, the trajectory of Palantir stock after its recent post-earnings downturn warrants close observation. The current dip in the stock's value can be attributed in part to the underwhelming second quarter performance. However, the broader trend of high valuation tech companies declining since August began might be playing a role. In summary, Palantir stock is currently experiencing uncertainty due to mixed sentiments about growth and valuation. The company's recent financial performance, including Q2 results, has led to a decline in stock value. But what do you think? Could Palantir Technologies be your ticket to riches? Let us know your thoughts in the comments. And make sure to like and subscribe for more videos like this. Thanks for sticking to the end. This is Nate, and I'll see you in the next one. If you want to see the aftermath of Palantir's Q2 earnings, check it out on this next video.